Hello everyone, welcome to the live stream. I'm James. We start in 6 minutes time, and welcome to those of you here already, including NK and Joydeep, both from India. Lovely to see you. How's the weather over in, I don't know where you are, Bangalore, Delhi, Mumbai, Coimbatore, where I've been to all of those places. Welcome to the live stream, folks. Welcome to the live stream. I'm James. That's all working over there, so we're ready to go. Folks who are here already, if you wouldn't mind just letting me know that you can hear me well and that the audio is good. And if so, we'll carry on as if everything is normal, which it should be. Hello, Denise. Nice to see you. And I've got two screens to look at now. Absan, your question is natural gas. Yeah, we're going to start with natural gas today. We start in 5 minutes' time. Rohan, lovely to see you. Are we going to talk about natural gas shortly? Mumbai, okay. Monsoon time in Mumbai. Yeah, I've been there in monsoon time actually, NK. I've worked around, in and around Mumbai, and I know it relatively well, as anyone would know any big city really. But I really like it. It's one of my favorite places in that part of the world. And Joydeep's from Kolkata. And I could do the, I don't know if the Slumdog Millionaire dance crew was from Kolkata or Mumbai. I think it was Mumbai. Hello, Himanshu. Tandai. Audio good, video good. All right, folks, so I'm going to start off with natural gas. I'm going to start with a COT report as soon as we get going in a couple of minutes' time. And I'm going to go through there's nothing really to say except that everything's pretty much balanced. And we'll also have a look at the economic calendar, what's coming up a little bit later on today with the jobs. And then, of course, the EI Natural Gas Stocks Exchange, July 04, which is also meant to be a pretty boring number. So not an awful lot to say there, but we'll have a look at the numbers very quickly anyway and decide if there's any useful info there. Joydeep wants to talk about gold. Hi there, David. Nice to see you, mate. And Mike Kozni. Good day. Nice to see you, as always. I'm terrible at pronouncing your name, and if I get it wrong, which I probably do almost every time, I apologize. In hindsight and in advance for the next time I get it wrong too. Hello, Himanshu. And Glastek from Poland. Poland. Difficult part of the world that you're living in right now, my friend. I'm sure you know more about that than all of us do here. So strength to you and all of you in that part of the war-torn part of this planet, very sadly. I think I'm going to start a little bit earlier, and the reason for that is because my browser takes a lot of resources from this whole video setup, and I've got several MacBooks running and several cameras and mics, but it actually still seems to deplete the resources. So I want to get rid of the browsers, which take up most of the resources. I'm going to start with this right now. If you miss this, which you will if you come in right now, or when the session starts, you can always rewind, but I will mention it as we go along, just to let those who have come in later. So I just want to look at two charts here, 2 pages. This is the COT report from natural gas, on natural gas from barchart.com. I've zoomed in a little bit so you can see it. And but it's barchart.com, it's free. Anyone can get this info. Just go to barchart.com and sign up. You do get a lot of adverts, which you've got to get rid of every now and then, which is annoying. Or you can pay for it and not get the ads. Let's have a look at what I just want to sort of scroll down here, make sure we're on the right page. Yes, we are. Just some commentary here. Natural gas futures market. This is what was produced by them on Wednesday. That was yesterday. Just their commentary. It's a commentary. Like any other commentary, you should pay very little attention to it, especially if it's from people that are involved in brokers and market making in natural gas, which barchart.com may well be. I don't know. Let's read it. August NYMEX natural gas on Wednesday closed down by a tiny amount, 3.77%. Quite a lot, actually, 12 cents. August natural gas prices tumbled to a 6-week low and settled sharply due to cooler US weather forecasts and the outlook for higher natural gas inventories. And forecaster Weissoller said on Wednesday, forecasters shifted colder in the Midwest for the following week. And weather outlooks also look colder for the eastern half in the week following that. So the cooler temperatures should reduce natural gas demand from electricity. Remember, we're in summer now, not winter. And so cooler temperatures reduce demand because of air conditioning. So we've got a bit of a supply, a demand, not shock, but perhaps reduction in demand because of that. Higher temperatures, lower demand in summer. The outlook for natural gas inventories is also bearish. Consensus is that Friday's weekly, Thursday today, will climb by 61 BCF, and blah, 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 blah. And all of that, I don't really read much into any of that. Let's have a look at the seasonal chart. We're basically at the seasonal average right now, at $3.20-ish. The seasonal chart actually ticks up quite sharply from here, as you can see if you look on the right-hand side of this bar chart, or line chart. So we're at the bottom of a sort of seasonal up move. That's something to consider. But most importantly, let's have a look at the commitment of traders' positions. And what you'll notice immediately by looking at this is, let's go from the top left down. Commercials, 488 long, 416 short, pretty much balanced. Producers, 195 long, 238 short, pretty much balanced. Managed money, 181 versus 233, pretty much balanced. Non-commercials, a little bit more to the short side, if anything. And then the swap dealers, we should look at the opposite side of what they're doing. They're 152 long, but only 38 short. They're expecting this market to go down. And then other reportables, retail traders really, and smaller traders, smaller orders, smaller riffraff, that's us. 70,000 long and 111 short. Pretty balanced for the retailers, actually. And you'll often see much more extremes on the retail side. And we're roughly 70 versus 110, not a big difference. And adding a little bit more to the short side onto a already weighted short overall sort of position. So everything's pointing downwards, but we're hedged. So we'll get back to that shortly when we get to the charts. So if anything, neutral to bearish, I'd say, from the COT report. And looking at the EIA gas report later on today, in 2 hours and 28 minutes from now, consensus, let's have a look, 55, previous 55, expected 55. Previous 55, consensus 55, 56. I don't know what we'll get. It all looks pretty tame and boring and uninteresting. So what I'm going to do is close down the Safari window and go to the charts straight away, and let's get into it. So let's see if I can do this smoothly and efficiently. Let's hide that. We've got the charts, fantastic. And let's close down Safari to prevent resource extraction from my systems here. All right, so we're on the charts. Let's talk about natural gas whilst we're on it from the COT report and so on. And I'll switch straight across to that chart right now. I've got the energies charts here, uranium on the left column, NatGas top middle, NatGas top right, and along the bottom I've got UEC, another uranium play, and then Brent crude, and then WTI bottom right. We're going to be looking at the natural gas futures. I'm trading the futures, not the continuous price. The continuous price is the one in the middle here. This is the price provided by Pepperstone Brokers, and the futures price over here, which I'm trading, which is the Henry Hub price, is provided by Black Bull. If you're interested in trading with Black Bull, there is a link on my website, and just click on there and have a look around. They're an ECN broker based in New Zealand, and they do allow hedging, unlike many other brokers. My recommendation, I've been using them for a long time, and that's my main broker. So let's have a look at this chart. Remember I said from the COT report and the EIA, if anything, just nothing really, or if anything, slightly bearish. Well, what we've got on the chart here is something like a falling wedge. Now, I've got to redraw some trend lines, as you can see, because I've got this black line, first of all, falling down, the one that we're sort of moving down. Let me, first of all, tell you my positions before we, so I can put you out of your misery and out of your pain. I have no position, essentially, on natural gas. We got long here at the bottom of this range. We talked about this yesterday or in the previous live stream. That wasn't yesterday. I held a webinar yesterday, and if you'd like to see that webinar, it is password locked, but if you email me, my email address is james@ArcisFX.com, james@ArcisFX.com, or you can put a comment up in the comments or put something up in the chat right now, and just email me, rather email me, and I'll send you the password and the link to that webinar. So that's what I was doing yesterday, and we talked a little bit about hedging and natural gas as well, but I haven't had a chance to redraw these trend lines. So I'm going to do it right now, and I'm going to pull this black line as you're watching to make more sense of what we've got going on here, and I'm going to put it actually on top of that red line which is facing downwards. So I may choose to cut off that wick, which I will do. I'm going to get rid of that red line, and I've got a much neater downward facing trend line with a little spike out through the top there. A lot of people ask me why I have cut that wick off in this instance and why not draw it through the top of the wick. The reason for that is if I drag that trend line to the top of the wick, you'll notice that then it moves away from the previous touch of the trend line and makes for a weaker looking trend line. It also moves away from that one right next to it over there in the middle. So if I move that trend line up, I'm losing 2 touch points, that one, in order to gain only 1 touch point, this one here at the top of that spike. That makes my trend line have fewer touch points and thereby, from definition really, a weaker and more useless trend line. You can do it like this if you want to, no problem whatsoever. I tend to try and make the trend line reflect more of what the market actually thinks rather than an errant spike out through the top. And if I draw it like that, I've got 1, 2, 3, 4 touches, considering the body of that last spike up to be the touch. So that's a much better trend line. And now that I've drawn that, I can look at the overall picture. This is a 4-hour chart, and see very clearly we've got a falling wedge pattern, which is a bullish reversal pattern, and that we should expect the price to move into the apex of this falling wedge and eventually bounce out. The apex could take us all the way down to $3.12. We're currently trading at $3.20. My hedge position, we got long at about, 328, 338, and we're hedged at 328, something like that. So we're like 9.5 cents apart, not very much, and quite a small position. So I'm willing to add some more on a dip down to that trend line, looking for a bounce into the apex of this triangle and for a move back up, probably first of all to the 200 period moving average and the top of this orange block, and obviously first of all the top of the falling wedge. And that would take us, if we bounce today in the next number of candles, that would take us up to 3.26 where we originally hedged. I might consider removing that hedge and allowing my long positions to run into profit thereafter. I may have even at that point added another long position at the bottom. If you don't know how to trade these hedges and moves on natural gas, I've got one person that I've been speaking to, actually 2 in my private group, and I'm perfectly honest and accurate when I say 2 of them in big losing positions on natural gas. And the reason for that is because they didn't understand the instrument properly, they didn't understand leverage, and they didn't understand how to hedge, and generally, basically, and no offense to you, I'm sure you're both here, basically not really knowing what they were doing. Ending up with a long position way above us and a short position way below us, for example. There are different scenarios. We don't want to get into that, and certainly you don't. And we're talking about people with multiple tens of thousands of dollars in their accounts, and even 7 figures. So you don't want to be losing 7 figures because you don't understand a very simple natural gas chart, and because you don't know how to hedge, and because you don't know how to manage your emotions and your risk. That's part of what yesterday's webinar was all about, and I've got some feedback already. People tell me it was one of the most useful, interesting, and illuminating webinars they've ever attended. I'd highly encourage you to watch the video, the webinar. There is a link below. The reason I pause is because I'm not sure if there's a link below. I may have forgotten to put it there. So if not, email me, james@ArcisFX.com, or you can email Emily@swingtradingblueprint.com, Emily@swingtradingblueprint.com, and we'll send you a copy and the password for that webinar. And I'd also just encourage you to join my private group. It's the cheapest, easiest, quickest way to solve your trading problems. You can ask any folks in there right now, and we're growing rapidly, and I think you'll find it's a great community where you'll learn how to trade and get profitable and stop losing money. Let's get back to natural gas. So bottom of this falling wedge into that apex is the first area to observe. Now notice that we are trying to bounce off this level already, but look at the way we've bounced. We've a little sort of tiny spike down to the bottom of the wedge, and then the last 1, 2, 3, 4, 5 4-hour candles, in other words 20 hours, we've gone nowhere. We haven't gone up, we haven't gone down, which is great, but we haven't gone up. So no real reaction, no obvious price magnet bounce off that price level, and so it's looking a bit flaccid. It's more like a bear flag than a bullish reversal, and so we're going to have to wait to see what happens next. We don't have any further positions on. I remain hedged. I'm looking to get long, target $4. If we break down below $3 at any time and close below $3, I think we're going below $2.50. Yeah, put that in your pipe and smoke it. So for those of you who are long, be very, very careful. I've already helped one of my members hedge his way into protection, if we can, with a losing position on natural gas. And if you want to learn, if you have a position that's gone against you by that extent, you don't know what to do, just come and join us. It's not free, but it's not expensive. Pretty cheap, in fact, I think. Right, that's all natural gas. Please put up any comments if you've got any further questions on that. While we're on this page, I'm going to talk about WTI. I should have got short again. I have not done so. We have a triple tweezer top at the 200 period moving average. This looks like it's going down. I've already got a decent, most of the size that I want on this, but I probably or may consider adding another short position right now as soon as we finish this live session. This is a 4-hour chart. We've broken down support. For those of you in my private group, I will be adding another short on WTI at the end of this session. And we have 2 hours until this 4-hour candle rolls over. Folks, in my private group, please pay attention. 2 hours time. We may add some more shorts to WTI. The reason is we're at resistance on the 4-hour. We're at resistance on the daily chart. We're below MOAB. We're below the 200 period moving average. My directional view on this is down towards the bottom of the channel, down towards 55, eventually a breakdown below there, to much lower and cheaper natural oil prices in general in the future. And I think we'll be trading between $50 and $70 rather than 70 and 100 for the next number of years, maybe even. So let's see how we go. We're short a decent chunk on that. I'll probably add some more. That's how much I like that trade. So that's energies. URA, we don't have position, looking for this dip down again, back into that support. The buying zones for me on URA are 31.8 and 28 to 30, somewhere around there, into these order blocks, the moving averages and the Fibonacci support levels. And at the same time, we're still long. We didn't take our profit. So basically, let me just review on this one. On URA, uranium, we got long right down here ages ago in April, and we took profit sequentially, 25% at, so we got in at 22. We took 25% off at 33. We took 25% off at 35, and we took 50%, the balance, off at 39. I'm looking for this to pull back to get long again. That got overstretched. The trend line was too neat, too long, too perfect, too symmetrical. Markets aren't like that. Whenever you see perfection, with one exception, by the way, which I'll talk to you about shortly, if you see perfection on the chart, get worried about it, except for one exception, and that's Bitcoin. I'm going to talk to you about it shortly. This is UEC, so I want to be long on uranium. I'm very, very bullish on uranium. And UEC, we have not taken any hedges or shorts or closed any positions. We've taken no profit. I have a long position from $4.77 and one that's now run into negative at 646. We're trading at 607. I still want to add some more positions onto this. We're approaching that level now. Today could be the day, probably will be. And I think at about where we are now, just around $6. I see we've bounced up in pre-market already, so we're going to have to get in at around $6. So a little small addition to the UEC trade, waiting for URA to come down. Brent crude, we're short, decent chunk on that. Natural gas, we're hedged, looking for an opportunity to get long for a bounce back up. But if we close below $3, we're heading down to 250 and maybe even lower. Let's quickly swing across to currencies. We took a new position this morning, long on the pound. That's moving down. So not great, but we got long there at the 20-period moving average. It's moved down a fraction only. Only a 20% position at the 20-period moving average. My target is 1.41, and I'm hoping that we're just consolidating at the 20 and above the 50. We did get long prior to this, but we got out at the top there and we took profit. I've now re-entered that trade essentially, but with a slightly smaller piece on this one because I don't want to recommit all of it at this point. We may have to retrace again all the way back down to the purple line at 134.20 and the rising trend line underneath us. That trend line at the top now we can delete because that one's been defeated. So that trend line, the 50-period moving average, and this level, obviously big breakout level, previous swing high, 31.10 there, 31.10 there, 31.10 there, 31.10 there. Do we have to do it again? Most probably, but maybe not. So we've taken a small tranche right here at the 20-period moving average, allowing for a dip down to that level there to add some more at around 34.10, maybe 34.20. So that's it on the pound, nothing on the euro. Pound yen and euro yen, we have shorts on those now. As you can see, those are moving down quite beautifully, and I hope they carry on doing what they're doing right now. So a good position on this, and in some profit on that one, on that top position on the pound yen. We do have another position lower down there, but these are small positions, and I'm really looking for this to actually start moving in our favor before I add some proper size to it. Same with the euro yen, and these didn't work out as initially expected. We had what looked like a big run up, a bear flag, and the next leg down should have been down to about 144. Instead of the bear flag breaking out through the bottom, it broke out through the top. Notice the telltale signs, which I didn't pick up and I should have. Trading within this bear flag channel, moving sideways, it's a rectangle. We should be trading from the top to the bottom, from the top to the bottom, and then we break out one way or the other. A good giveaway and telltale sign that it's not going to break out through the bottom, in this case, is that once we got to about, I don't know, the middle of March, end of March, we no longer got down through the channel center line, and we stayed at the top zone, the top range, the top part, and actually above that rising trend line, even though it's a very nasty and dirty trend line, not clean at all. Nevertheless, I should have seen that we were holding the trend, we were holding the moving averages, we weren't getting back down to the bottom of the channel, and that should have been the sign that we were going to break out through the top. So we broke out through the top. We had to hedge our positions that we got short on within the channel right there. As soon as we broke out, I hedged the whole bang shoot. We tried another very small piece at the 618, and we tried another very small piece at the 78.6. And that's it. Next stop is obviously right back at the top here, if we break up through here. And, that's already hedged down at the bottom, and I'll have to hedge these two new small positions. When this gets going, folks, it's got a long, long, long way for it to go down. And the euro yen's natural habitat is much, much lower than where we are right now, down towards 130. And the pound yen, a similar sort of thing, down to about 150 or something like that. So these will come down eventually. They're really overextended, really out of their comfort zone. And there's obviously continuous talk of the yen carry trade unwinding. It's been unwinding against the dollar to some extent, but it's gone the opposite direction against the euro and the pound. They will come under pressure at some point in the future too, with this carry trade unwind, which is slowly but surely happening behind the scenes. Now let's go across to crypto. You saw the big headline, I'm sure, yesterday. I hedged 1/3 of my very large, long Bitcoin position. It's the first time I've done it, apart from daily scalping, which I do in the evenings. But I talked to you about these very perfect, neat chart patterns that you should be inherently suspicious of and never trust, because they never work out and charts are never that neat. Well, I had to bring up one exception, and that's Bitcoin. Look at Bitcoin. Everything about this chart is perfect. All the moving averages, the Fibonacci retracements, the price action, the movement, the breakouts, the pullbacks, just everything. There's nothing about this chart that's unpleasant, and it's like literally out of a textbook. Big move up, perfect bull flag, 2 touches at the bottom, 2 touches at the top, and a breakout. Textbook stuff. Now, and we can also project where it's going to go from here, because we now have a broken out, confirmed bull flag. We haven't made a new all-time high, maybe just by 1 penny yesterday, and I'm going to come back to the hedging shortly. But this is what's happened. I've also noticed in the newspapers around the world, people are starting to take Bitcoin payment for movie theaters, for fast food places, for airlines, and a whole plethora of places are now taking Bitcoin. And I just saw something else somewhere in another country splashed all over the show, Bitcoin payments. So when you see that sort of thing in the news, it's near that we're basically entering the top. We're seeing the FOMO in the market, in the marketplace, but not on the charts. The FOMO in the marketplace takes place about a month before the FOMO hits the charts. So about a month from when all this started coming out in the news about everyone taking Bitcoin all of a sudden, when no one was taking Bitcoin a month ago. So about a month after that, and I suppose about a week or two from now, is when this FOMO should hit the charts. I think it's already doing it, broken out of that bull flag. And what we can do now is build this structure. It's so simple. This is out of a textbook once again. There's the bull run. There's the flag, as perfect as you can get. And the target, if you just take the bull flagpole, same angle, same length, and tack it on to the end of this thing, starting at the bottom, you get the targets. I've drawn two targets in here, one on the 25th of July, one on the 10th of August. And the reason why I've paused on the 25th and not just gone straight to the 10th is because we also have a very, very important rising line, which maybe you haven't spotted. Many people don't seem to have spotted it, but let me draw it in for you. That big rising red line going all the way back to 2017, skimming the tops of all these massive rallies, actually only two of them really. And look where the top of that line goes to eventually. And it meets us on the 25th of July if we follow that bull flag, second flagpole, breakout flagpole. 25th of July. Right, so that's 15 days, 2 weeks from now. I'm projecting we'll be at 122,000 on Bitcoin. And a little bit later on the 10th of August, 137,000. And I think this is potentially either the top, and I think it's 50-50. The top could be around here at this time. In other words, 2 weeks, a month from now. Or this is the beginning of a linear move. This is really important to remember. Let me just reset this price scale. This is a linear move we're talking about. These are lines, not parabolas or exponential charts, just lines, straight lines. I think at the end of that line that we just looked at, we could then go parabolic and exponential rather than linear. That's the way these markets work. Look at this one over here to the left-hand side of your chart. Let me put it right in the middle so you don't miss it, where my crosshair is right now. There's the rally that's kind of linear, and then we go exponential. You see it all the time on Bitcoin. There's the rally, and then we go exponential. There's the rally. Okay, there's the rally, then we go exponential. So we've now just got the rally. Are we going to get the exponential part? I don't know. I think it's equally possible that we get an exponential parabolic liftoff from around about 130,000 upwards. And that means estimates for Bitcoin this year are way underestimated, or around about the top of this green line that I've drawn in is going to be the top, and we don't get the parabola, and we just get a linear, feeble, skirty little move up to one of these levels and these times. At the very best, maybe 137, half decent run to 122, and then maybe we just fall down and dribble down into a bear market. I don't know. No clue whatsoever. But for now, I've hedged for the first time, and I'm long with a lot, as you can see, all the way down from the low 70s. So, and then a whole bunch here in the low 100s. And we're now at 110, 111. So I've hedged 1/3 of my Bitcoin holding. That means I haven't closed any of my long positions, but I've taken a short position precisely where we are right now at 112, just under 112,000. So I've got all of these longs, and now I've got one short, and I'm going to draw that officially on my chart like that at the top of yesterday's candle. And I got in there literally at the top. The sensible place to hedge, right? At the top, at the all-time high. And there's an alert for natural gas coming in, folks. We'll attend to that shortly. And that's Bitcoin. So, sorry about the noise. It'll turn off shortly, I think. That's an alert for natural gas. Let's go to the chart quickly while we're here. Natural gas running up. Okay, that's what we want, folks. Now, for those of you in my private group, one person in particular, I hope who is listening, you have not hedged yet. Do not hedge your long natural gas position with a short just yet. Wait for me to get back to the private group. I'll tell you what to do. But we're heading up into the area where you need to consider hedging. We're heading into the area where I need to consider unhedging. We've got a few different plays going on in the private group with private people and different difficult situations that they've been in. Natural gas is rallying. That's what we want. We're getting a bid on. Remember, my target is $4 and maybe more, maybe even $4.50 or $5. But we need this to hold today. Don't get too excited. We've got the natural gas coming up, report coming up. We've got tomorrow's Friday. Friday, often we get big corrections and messy markets. And then we got the weekend, and then we get a weekend gap. And we don't want to really get involved in that. If you're holding a difficult position, rather stay hedged. Trust me. You can stay hedged until Monday. Just do that. If you have a very difficult position, you're long, you're short, you have a massive drawdown, you're hedged, you don't know what's going on, you don't know how to play it, just don't do anything, okay? Make sure you're hedged, make sure you're protected. But this is looking good, folks. We're moving back up to our hedge level. We've got two long positions just above that hedge. And if we get there shortly, I'm going to have to decide whether to remove the hedge and let the longs run, perhaps even add another long. I don't have the size positions that some of you have with over leverage and losing positions and drawdowns on your account. I don't have that, so don't take my trading advice and apply it to your situation. It's completely different. But my situation is I've got 2 longs, tightly hedged. Should I take the hedge off and let the longs run, or should I leave the hedge on over the weekend? That's the only thing I'm going to consider, and that's natural gas. We started talking about Bitcoin, etc. So basically, I'm long on all of these. The altcoins seem to be breaking out faster than Bitcoin, which is great because I've got Ethereum, I've got XRP, I've got Bitcoin. Ethereum and XRP both looking really good, particularly XRP. And we've been waiting for, and remember I spoke about these breakout channels. We talked about euro against the dollar yen, the euro yen, and how we hugged the top of the channel. And I should have spotted it, and because we weren't getting down through the channel center line, eventually we broke out through the top. Look at XRP, very similar situation. We've got a channel. We tried to get down to the bottom a number of times, and recently we didn't even bother to try. We just stayed near the top of the channel, and we've now broken out through the top. I like that chart very much. Another clear signal that it was looking to break out upwards and not downwards. The fact that we were trading along the top of the channel underneath it, but in that vicinity. All right, and then, yeah, so these are all entering order blocks, so we have to be a little careful. And as I said, I've already hedged some of my Bitcoin. It's a big hedge, and it's not just point something of a Bitcoin. So it's a big decision for me. It's quite a lot of money, but I'm fine with it because I have not closed my long positions. That's one of the beauties of hedging, is that I'm holding my long trade. I've added a short trade. It's got nothing. My short trade is irrelevant to my long trade. At some stage, I can take all of that profit off on the long trade, and at some stage, I'm hoping when Bitcoin retraces, if I have to, I can take all the profit off on the short trade. Or we may get up to a ridiculously extreme level, like $200,000 per coin next month. Don't think it's going to happen. And then it won't really matter. I'll just take all my profit on the long side of the hedge, and I'll take the loss very gladly on the short side of the hedge. And my net balance, my net result will be a 66% profit on the entire lot. So there we go. That's what I'm thinking. 33% hedged on Bitcoin. On gold, we're still long. We got long a few days ago into that apex of that triangle. Looks like a bull flag. What else can I say? We're holding that level. Lowest we got was 3283. We got long at 3310. And we're long. And I think gold's got every opportunity. Just bear in mind, folks, if you've been watching me for some time, I've got two, maybe three downside targets. Yeah, let's call it three. Three downside targets for gold. 3120 at the bottom of this range, this last swing low, bottom of this order block. Then down to, that's 3120. Then down to the trend line and the 200-period moving average. That's around about $3,000. And then down to these order blocks below that at around about $2,700. None of those will occur if we don't break down below where we are currently right now. So we're trading at a very crucial price and time. We're holding the rising trend line. We're holding the 50-period moving average. We're holding the Fibonacci support level. We're at a crucial zone. If we don't hold here this week, we're obviously going down to 3120. And I'll be looking to add some more. I'll be hedged by then, probably looking to add some more there. And if that doesn't hold and breaks and closes beneath there, we're probably heading down to 3,000. None of those can be ruled out. In fact, I think there's an equal chance of that occurring as there is of this moving higher. So I've chosen the long side for now because we're in a bullish market on metals. So I've gone with the long side, but I'll hedge this in a flash if we see some weakness and it starts moving down. And we got out of our long silver position. We have no positions on silver, and we're just flat. Once again, you can see where we got in. We got in long at 31, and we got in long at 36, and we got out at 36 on that last tranche. So we're basically flat on silver now, no positions at all. But once again, like silver, like gold, I'm bullish, and I'm looking for this to maybe dip down for a buy at the 50-period moving average and the breakout zone, and that could take us back down to 34.5 and maybe 34, 35 into this zone here. So we've had the breakout. Don't be too eager to get long now. And like I said before, and please go and look on X, I put up a perfect, beautiful example, and I'll illustrate that in this live stream too. But we're looking for the breakout pullback trade, and we saw it on, here we go. We saw it on the instrument that I put up. I'm going to cover it shortly. This is the sort of thing. There's the breakout level. It's really simple. We have a top. We broke out through the top with a sudden surge, and we need to come back down, kiss it goodbye, and resume. Simple as that. Now, you saw my copper trade. I'm going to talk about that right now. So that's my plan on silver, and I'm going to talk about copper because I'm super excited about this one, and I'm not going to talk much about anything else on this page once we've done. This is once again another breakout pullback trade. If you remember, and this is probably the best trade of my year so far. In fact, almost certainly that and Bitcoin, I think. Interesting that they're somewhat related to each other. So there's copper. This is obviously tariff related, but Bitcoin and copper have a relationship. And we got in along there, and we had this lucky surge up to $5.55. That's where we got out. So we got a massive profit on that trade, undoubtedly. I then decided that I want to get back into this trade, and I posted up on X and in the private group, and I think in the live stream, the previous live stream, that we need to wait for a dip back down to this trend line, a breakout pullback, like I've just shown you on gold. My plan on gold, was it gold? No, it was silver. Like I showed you, my plan on silver, we had the same thing on copper, but we've already executed that plan. It's already happened. Let me show you. I'm going to do the 15-minute chart on copper, and there are our trades that we've taken. We got long at the bottom there. We got out at 5.55, and then yesterday, was it yesterday or was it this morning? I can't remember. I think it was yesterday. Yeah, it was obviously yesterday because the market's moved up since then. Yesterday, I posted this up on X and gave forewarning in advance to my private group. If we get back down to the breakout level, the channel line, trend line, then we should be looking to rebuy copper to resume the trend that we already started. We took profit. So we took profit at 5.55 and we got back in at 5.35, thereby saving ourselves 20 cents on the pullback. So we got 20 cents cheaper than if we had just held onto our original trade. Beautiful breakout pullback. One of my colleagues in the Ola Prime live stream, Richard, he calls it, his term is to kiss the level goodbye. And I hadn't heard that before. I'm a bit old-fashioned, but a number of people use it. I've heard it now a few times. So we break out, leave it behind, and then we come back to kiss it goodbye and say, we're actually out of here, but I'm just saying goodbye. It's been nice seeing you, been nice knowing you, but I've got to get out of here, and off you go again. And that's the breakout pullback trade. We've done it on copper already, and I now want to do it on silver. If you only learn how to do that trade, folks, on a higher time frame, use 4-hour, minimal 1-hour charts or day charts. But if you only learn how to do that, breakout pullback trades, and you did nothing else at all, ever, you would probably be pretty profitable in your trading. And it's not very difficult to learn, is it? It's pretty simple. So that's a little tip for you. If you're frustrated, lost, don't know what to do, forget everything you've learned, trade the breakout pullback type trade. And sometimes that's just what you need to get yourself back on the horse, so to speak. I know exactly what it's like when you lose direction with your trading system. I've done it multiple times in my trading career, over 30 years now, and you lose confidence in your system, you lose confidence in yourself, you lose confidence in your analysis, your brain, your charts, you'll do things like change brokers, change charts, change your computer, get a Mac instead of a Windows computer. Maybe that'll help. Or maybe if I use TradingView charts instead of the charts from my broker. Or maybe if I switch to a hedging broker, that's not a good example. Maybe if I switch to a broker that's, or maybe a prop firm, maybe that's what I should be doing, and use the prop. And you get into this thing that you don't know what you're doing, you're completely confused and lost, and there's absolutely no reason for it. Nothing has changed, you've done nothing wrong, you just got confused, that's all, and you lost your way. It happens to humans all the time. And so all you've got to do is get back to simplicity, find something that works, and that's easier said than done. If you don't know what to look for when you're looking for something that works, this is what I'm talking about. The breakout, pullback trade. I think I should do a video on it, actually. I'm going to do that, and I'll make it available to the members in my private group as well. So breakout, pullback, natural gas getting a good wiggle on right now. For those of you who are long considering hedging, not just yet. Those of you in my private group, you know who I'm talking about. We're getting there. Just hold on. I'll be out of this stream in 15 minutes, and I'll come and join you there. All right, now let's go across and have a look at this chart. This is the Rand against The dollar South African rand. Sorry, I lost my train of thought. Dollar South African rand. Just to say, we're long on this one still. Moved down way too far, too quickly. We've seen strength in metals, platinum group metals specifically, but also gold, silver, uranium. All those metals come out of the ground in South Africa. I think that was part of the reason why the rand strengthened against the dollar. In other words, this chart moved down, but there's no reason for it. South Africa's an absolute shit show right now, and this should be at 20, 22, 24. Something's holding it down. It's not natural. It's been manipulated, in my opinion. And I think we're going back up to 20, 22, 24, like I just said. So we're long on that one. I've never been short on this pair in my life. So that tells you something. We started off at like 6 rands to the dollar when I started trading. Literally when I started trading 30 years ago, it was 6 rands to the dollar. And now it's 20. So we're not going to talk about politics in here and about the country of South Africa, because I love my country and I've been here for a very long time and I'm not even South African. Although I am now able to apparently get a South African identity card because the rules have changed and foreigners are now allowed to have one. So I'm looking forward to being a proper South African resident citizen. So that's the rand. And then VIX, yeah, so VIX, I'm starting to get the questions about VIX. Should we buy VIX? Should we buy VIX? Why would you want to buy VIX? VIX trades within this beige block most of the time. And I buy VIX when it gets to the bottom, and I get out of the VIX long trade when it breaks out through the top. I don't short the VIX, and I don't buy it unless it's at the bottom of this block. And every time we get to the bottom, at some point, it moves up, and when it moves up, breaks out through the block. And it's roughly between 25 and 12 and 25, something like that. So buy it at the bottom, close it when you're out, when you break out through the top. So we're not at the bottom just yet. We've got to get down a little bit further, maybe down to like 13 and a half, but I prefer to be down in like the 12s, closer to 12, and then be looking to buy VIX for a move to. And basically every time if you buy it at 12, you aim for double it, to double it. So you aim for like 20. 24 through the top of the channel. And if you hold on a little bit longer, sometimes you get these really massive spikes, but not very often. It's better to get in at 12 out of 24. And unless that opportunity comes along, I don't trade the VIX. I'm also long on TLT. That's actually got a bit of a pickup today, strangely. And we're back at break even. And should I get out of this falling wedge TLT Treasuries junk? Or is this going to squeeze out through the top dramatically any day now? I think probably it will do. Probably just after I exit at break even. So when I get out of this trade at break even, I'll let you know in the private group and also here in the live streams, and that's when you can pile into the longs on TLT. Until then, just wait. And then softs and grains, sugar got a wiggle on, although I told you, I put this up on X, I said we're going to smash up through this channel center line on sugar. We didn't. We tried. We got above it fractionally, but today we're just slumping below it. Still like it though, very bullish on sugar. It's another falling wedge pattern. All of these commodities, the softs and the grains, getting a bit of a bid. Wheat's looking fantastic. We covered this in some detail on a couple of occasions now in the live streams. We've fallen back to the 618, allowing for a dip down to the 786, which we've already done. We're falling into the apex of this triangular pattern, which is a bullish triangle, and we've already broken out once. We've weakened that falling downward wedge trend line triangle pattern, and we've tried it a second time. Didn't manage to get through on the next occasion, but I think on the third occasion we'll get through there and we'll stay above there. So I'm long on sugar still, wheat. I'm long on sugar, long on wheat, short on cocoa, short on coffee. These are just dribbling down. At some point, I'll probably add some more shorts on here, but really I'm just waiting for this to play out. That's cocoa, just holding my short position. That's it. And then same on coffee, really. Although I might consider coffee, we've got out of our trades, but I'm looking to get back into this one short again, and maybe back at the channel center line and this falling, steeper pink channel top. That would be a great place. 327, 328, maybe 330, 330. Somewhere around 330 is the place to be selling coffee again. We don't have any positions on that just yet, having taken quite a good. That was another very good trade, actually, coffee. I'm pretty pleased with that one. And also we had a good trade. We've had a couple of good trades. Most of these softs and grains are going very slowly and very dribbly and very boring. And then we also got longs on cotton and corn. And cotton and corn, and this is probably meaningless to you because this goes back a couple of years, but we've been long on cotton all the way up this trend line. We took some profit, I think, at the top, at the black line over there. We didn't get that last part of the rally up. We dropped back down again, and we started moving up again, and I got long there as we approached that black line again. So we got in cheaper than we got out, but it's now starting to dribble back down again, just eating back into the profits on the long trade that we took initially. And at some stage, I still think we're probably just moving sideways across the page on corn, very much like some of the other ones. And so perhaps we'll just be ranging somewhere between, I don't know, 370 and 470 for some time to come. At some point, I think these will all base and start to try to get to the top. And I'll tell you why I think that is when you look at things like wheat and cotton and sugar, they're all stirring a little bit. And I think corn will come along with it. This is a great chart as well. Cotton, big basing pattern here, double bottom against the channel bottom, all sorts of spiky behavior, eventually breaking out through the top quite violently with a gap, moving sideways, consolidating, accumulating, I'm hoping, and not distributing. We have long positions from all of these spots in the middle of your page right now. So that's those softs and grains. And I think that's all, folks. I think we've covered everything. Natural gas still moving up a wee bit as we're talking. I'm going to get to some of the questions right now and greet some of you. And I appreciate you being here. Thank you very much. Please like and subscribe before I carry on with anything else. Please go down to the bottom of this chat page below the video. You'll see a button that says subscribe. About 50% of you that watch these videos are not subscribed, and that's you, if you heard me say that. Click the subscribe button right down below the video. It really helps support the channel. I'm not asking you for money, I'm not asking you for time, not asking you for anything, just a little click. It really helps. I really appreciate it, and I'll continue to provide as much of the best sorts of information I possibly can for you guys, but I require your support in return for that, and I think that's fair. So let me go through some of the questions. Good day to you, Joydeep and Denise. And folks, I hope I've answered your questions on natural gas and some of the instruments that we're trading. If I have not adequately answered your question, please post it up again now. And I'll try and get to that. Audio is good. Thank you, NK. Hi, James. All the best from Poland. Thanks, Glastech. Appreciate you being here, mate. Peter Lee, audio and video good. Thanks, Peter. Ole from India. From Germany, sorry. Ole. Ole, half of your country has joined us in my private group. Come and join us as well. There's a whole bunch of Germans in the private group, and they all speak German too, and a bit of Oompa music going on and a bit of beer swilling and that sort of thing. So come and join us. Omkar, nice to see you. Tanil, in the YouTube world. Yeah. Oh, folks, I had a haircut as well for you, by the way, as you may have noticed. So hope you like my haircut. Thank you, Omkar. Yeah, so I'm going, oh, folks, I must just make this announcement as well. Starting on Monday, I'm doing a live morning show every morning, every weekday for Ola Prime TV, and I'll let you know the details. So I'll probably be doing my morning show there and then the live stream straight after that for ArcisFX. So you'll get two sections of the day. You'll have to put up with me for 2 hours if you want to. So watch out for that. That will be at 8:30 Eastern Time every weekday over at Ola Prime TV. That's HOLA, Ola Prime TV. I'm doing the morning show there with a co-host, and we'll be doing that every day, every weekday, 8:30 Eastern, 7:30 Central Time. That's correct. 7:30 Central, 8:30 Eastern, every weekday. And the channel's name is Ola Prime TV. And I'll see you there, if you can deal with me and put up with it. Can I put my email in the chat? Sure. Let me put my email up in the chat here, folks, if you want to. If you would like to get hold, so it's just james@arcisfx.com. Email me if you want to get an invite, a copy, and a password into yesterday's webinar, in which we covered and spoke for an hour. And from what I've heard, it was fantastic. Everyone thought it was amazing and very, very useful about hedging and how to manage risk. The most important topic of all of them and the least attended to. So email me, and I can't put it up in the description now because I forgot to do so, but I will send you the link and I'll send you the password as well. So it's all about hedging on natural gas. But yeah, not just natural gas, all instruments. But I will be on TV, Ola Prime TV, weekdays every day from now on, starting on Monday. So please come and join me there. And that's why I've had a haircut, because I've now got I suppose a sort of corporate job, really, in a way. It's not really a job. I'm helping them out there. All right. All right. Sebastian, I need to get to your question, and I appreciate you raising it, and your question is on the Swissy, so let's have a look at that. I'm going to use this chart, and the question is, and you have a hedge position on the US dollar Swiss franc. So what I'm going to do is just pull this up and have a look at where we are. I'm going to use my own charts, I think. I'll use the Black Bull charts. And we have been trading this recently, actually. And actually, I've been long in my private group. I'm going to get rid of all these lines. Let's get rid of all the drawings and see what we've got. So this is so my idea generally is that we should see further dollar weakness, but we've obviously moved down a lot on this chart, and it's moved down significantly. It's bouncing a little bit. Is the dollar bouncing? That's the first thing we got to look at. So if you're hedged, if you're long on this and you got caught long, and the market's moved down, and the dollar's moving down, and the dollar Swiss is moving down, you don't know what to do with your position. First thing you need to do is go and look at the dollar index and see where we're going on the dollar as a whole, as a commodity. The dollar index is measured against its index. Parity is at about 100. So if we're at 100, it's about parity, it's about normal, average. And it's the dollar measured against a basket of 6 other currencies. And I'm going to just make sure that occasionally, but not often, I'm going to just make sure what's in it. I'm just going to clarify, just to make sure. The euro is the biggest portion of it. Right, I typed into ChatGPT. I said DXY composition, and it type corrected me to day corn prediction or something. Okay, here we go. Dollar index. This is how it's made up, folks. 57.6% is the euro. Japanese yen, much, much less, 13.6%. So the euro is by far the biggest portion of the dollar index. Next one, the British pound, 11.9%, about the same as the yen. Next one, Canadian dollar, 9.1%, about the same as the yen. Then we get down to smaller ones, the Swiss kroner, the SEK, 4.2%, half that again. And then the Swiss franc, we think would have a big influence on the dollar index, has almost no influence, and it's at 3.6%. So almost none of the Swissy is in here. Therefore, this instrument is actually almost not worth looking at when you're talking about the Swissy. The Swissy has a life of its own, of course, because it's a risk-off element, and it's a risk haven. So people will rush into the Swissy when there's a problem, and we've had lots of problems. And that's why the dollar will tend to weaken against the Swiss franc when there's war, when there's economic uncertainty, when there's conflict, when there's political tremors, when there's Elon and Musk having a go at each other, Elon and Trump, and so on and so forth. But are we due a bounce? Let's have a look at where we are, and let's have a look at some of the historical parts. So here we are. We're very, 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 very low on the dollar Swiss franc historically. This chart goes back 20 years, and you can see we're right at the bottom of the range. Let's draw a line, or let's try and put some horizontal lines on here to make sense of where we are in this market. We'll put some fib studies in. So we're looking at lines sort of below where we are, and and we don't really have much reference. This is a weekly chart. So I'm going to draw some lines into this consolidation zone. In fact, what I'm going to do is rather draw a block, a rectangle. I've got to go to the drawing tool for that, not the lines tool. And I want to draw a block around this sort of zone here. And what you might call that is an order block. You can call it what you want. We were talking about this the other day. I'm going to make this channel. We've got an order block with what you might call a fair value gap above it. I don't call it that, but you might want to. There's the fair value gap. A fair value gap means a naked candle with no wicks or bodies anywhere near it. That's what we've got there. So, and that's going back to, that's 20 years ago. So let's go to where we are today. Remembering this is a weekly chart, so we're going to have to zoom in. And there's that zone that we just sort of drew in that region over there. I think we could refine that a little bit. It's a bit too broad. So let's try and squeeze this into something where we're not using wicks. We're just looking at the bodies of the candles. And I think we could do something like that and just pull that down into there. That looks a little bit better, actually. That makes a lot more sense as an order block. Right, let's scoot across back to where we are, and let's see what we've got. There we go, folks. We're at the bottom of that order block. It's a weekly chart. We're very, very oversold, all the stochastic, and RSI, MACD indicators will show this too. This is the 4-hour chart, probably good for long. Now, I don't know, I can't remember, Sebastian, what your situation is. Sebastian's a member of my private group, and we talked about his trade position. I really can't remember anything about it except that there's a hedge position on the dollar Swiss franc, and he's just asking about how to manage that hedge. And I had a look at it very cursorily, and I agreed with him that he had a good hedge, a good position, a good trade. And I think it was long but hedged short. But I think overall, Sebastian, this looks like a long position to me. We've got the lower 200 period Bollinger Band below us. We're at the bottom of that big, very, very long-term order block going back 20 years ago, which we drew in very accurately and very specifically around the bodies of those candles in that consolidation zone there before that fair value gap occurred. And so I've drawn that very, very accurately, not something I'm known to do. I'm a bit of a sloppy chartist. I don't believe in accurate, precise numbers on charts. I think that's just, men like to do that. Men like to obsess about minutiae, which is not necessary. But in this case, I did it, and it worked out. And I wasn't looking at this chart where we are currently trading today when I drew that, and you saw me doing this as I was doing it. I drew this block in without any regard for what is happening today, and now we've scooted back to where we are. You can see we bounced off the top of that channel twice, and we're now bouncing off the bottom. The market is respecting this zone very, very well, even though it's 20 years old. What a fantastic, wonderful, exciting, and marvelous world we live in, where things like that occur in the trading market. I love it. It is fantastic. I'm going to switch this back to a day chart. So I think we're going up on the Swiss franc against the dollar against the Swiss franc. And I think also by looking at the dollar index, which we decided earlier, has got very little relationship to the Swiss franc, only a 5% correlation in terms of weighting. This also looks like it needs to get a bit of a bid on and move up to retrace. This is a very long move down on the dollar index. I believe the dollar index is going down to 93, but I think we could get to 100 first and then move down. That means a 250 pip rally on the dollar. That means a drop of 250 pips in the euro and the pound potentially. That would put me hedged on the pound because I'm already short, long, and then a resumption of this trend on those, and then the dollar to move down further, down towards 93. So what I'm saying is, Sebastian, we may well see the dollar Swiss rally up by a few hundred pips. My target for this one, obviously, we've just spoken about this at length, is the top of the channel again and the 20-period moving average. So I'm not long, I'm not taking this trade, I'm covering this for your question, but the target, and I don't have the scale set up properly even, but let me just quickly change the scale so I can give you a more accurate number. So the target, I use 4 decimal places here, is, let's go with the top of this channel, 0.8, Sebastian. That's it. 0.8. We're trading at 0.7960 right now. I don't know where you're, and if we break up through 0.8, we'll go higher, probably up to 0.82, 0.83, something like that. But you'll just have to check it out. I can't remember your position precisely, I'm sorry. Must we close the long NATGAS as soon as possible? No, Martin, I said don't do anything. Might see some live trade on a stream. What are you talking about there, Tanel? Yeah, you could see a live trade. I don't take the live trades here because I've got all sorts of computers going on, and I've got to somehow, and my trading station's over there, so it's very difficult. I've got to get this all set up into trading mode, and I'm in streaming mode now, so it's a completely different setup. I'm very, very pedantic and particular about the way my desk looks when I take an action. When I'm streaming, it's got to look precisely like this. When I'm trading, it's got to look different and precisely the way I like it. And these little quirks happen, particularly with traders. We like everything to be perfect. And if your microphone moves one way or the other a little bit too much, or your pen runs out of ink and you lose a trade, you may associate your pen running out of ink with bad trading, or your microphone position with bad trading. And that's why we get a bit silly about it. A bit like golfers, I suppose, as well. Have I seen coffee? Yeah, we've talked about coffee. Crude oil, we've talked about all of that, everyone. Trimmed hair makes me look young. Thank you, Punk Piggy. Punk Piggy. What's the take on bullion? All right, we've talked about gold. Natural gas. Hello, everyone. TC is a private group member. It's definitely worth it, says TC. Come and join and take your trading to the next level. You won't regret it. There's my email address, folks, if you want to get hold of that webinar from yesterday and the password. Good day, John, new paid subscriber. Thank you for joining, John. I really appreciate it. My job in that private group, I'm evolving into, I've never really regarded myself as a coach or a mentor, but I suppose I'm kind of enjoying it. So the private group's becoming really quite a mentorship group. So I appreciate you being there. And I'm getting to know folks there one by one. And it's a little bit difficult because there's a lot of people there now, but it's cool. I appreciate you being there. Thank you so much, John. Jim from Ottawa, welcome to you too. Nice to have Canadians here always. Crude oil view, we talked about crude oil. Thoughts on live cattle? No thoughts on live cattle. Cattle WK. Price farms. Oh, farmer. Interesting. I wouldn't mind trading hog and cattle and stuff like that. But it's difficult. I haven't really considered, but sure. I mean, I'll trade anything with nipples, right? If you've seen the movie Meet the Family, you'll know what I mean. I'll trade anything with nipples. It's not rude, by the way. It's about a cat. Meet the Family. Talking about Jinxie cat. My cat's also called Jinx. All right, folks, let's carry on. Regarding the corn long, in the US is projected that it will be one of the biggest crop yields. Don't you think it would be better to short until 320 on corn? So yeah, but I'm aware of that. Big crop yields considered to be coming up. Of course, we have to find out, crop yields, bumper crop yields, and then it's crop failure. But a lot of this stuff is priced in, by the way. And I think this last move down now, look at the big gap down on this last move here on this contract. That big move down, I think this anticipation, and it's quite a big move. We've moved from 4, just generally, I suppose, from this sort of range of about 430 down to about 4. So that's about a 10% move lower down to here. Not quite, but about 8%. And maybe that's the factor that's already built into the harvest of this next season with the bumper crop, and that prices will come down a bit. And maybe it's only by 8%, and that's already built in there. And the rest of what happens throughout the season will affect where we go from here and not take us to here because we're here already. So it's very difficult to work out the timing with news events, and particularly in agricultural commodities, because these are often just rumors, and sometimes they don't come to pass. But sometimes, even though they're rumors, that's built into the price in advance, particularly in the futures, of course, because we're talking about futures, and then it doesn't come to pass, or something goes wrong, or it's built into the price. Someone short squeezes the market, corners the market, all sorts of manipulation. These are thin markets, easily cornered. We saw cocoa and coffee recently. So yeah, if you want to corner a cocoa market, all you got to do is talk to some folks in West Africa and make a lot of money. So corn's not quite the same, but I think it may be priced in already. We'll see how that goes. But I don't know. Let's see. I think technically, if we don't hold here, I don't think we're going to go. Corn. Were you talking about corn? You're talking about 320 on corn. Yeah. Well, basically, we've got to hold here. I mean, this is a pretty crucial level, really. That's what it boils down to. I'm willing to hedge this. I've got almost no size on this. I might just consider another long here. I'm glad you pointed this out to me, because I'm looking at this. I think what we've done here is we've factored in a larger crop already. And sometimes these rumors about large crops and so on, and rainfall, and just the whole lot that goes into the harvest and the crop and the yields is not accurate. I don't know, but I think, considering I've not got a lot on here already, and we're 8% down further from there, maybe it's a good idea to have a go. I'll talk to my private group about that as well. Possibly next week. Let's see if we can close strong this week. Maybe we get a bit of a bounce in the next couple of days, today or tomorrow. Let's see what happens. But it's a good idea, and I think we're at the right sort of level to consider adding a wee bit more, with the idea that crop yield may already be priced in. Istvan, welcome to you too, from Europe. And the corn crops are perfect for now. Okay, great. Blessings to you as well, Peter. That's a very powerful thing to grant to someone, a blessing. It's not to be taken lightly. TC, you're a mentor and an amazing one. Thanks, TC. Looks like your NATGAS will line up for a good short by the end of the month. Yeah, possibly, Jazz. Nice spiffy haircut. Thank you, Jazz. And thank you for your answer. Thanks, everyone, for being here in this live stream. I hope you had a great time. Once again, I must implore you, beg you, I don't know what else I have to do. Please just press the subscribe button. It's free and it doesn't cost a penny. And you'll get things in return for it. And I will too, and it's free. So I hope you do that. And please give us a like and a thumbs up and everything else. Click all the buttons below the video, actually. There's lots of buttons. Click them all, join everything, subscribe to everything. You're in the right place. You'll enjoy it. Take care. And make sure you email me to get hold of that webinar from yesterday. If you haven't got it, I'll send you the link and the password, and you can get in there for free. No charge. I'm going to have one last scan across the charts in the last couple of minutes, particularly at natural gas. Yeah, so moving up a little bit, a nice move. I like that on natural gas. It's not too aggressive. It's not too slow. It's just starting to angle up. And at the same time, we should see oil and natural gas reverse directions. Now, in other words, go opposite to each other. And I think we've been trading together for too long. And I think it was caused by all the kerfuffle in the Middle East. So we should start seeing these moving in opposite directions again. Looks like today. I really like oil, by the way. And I'm considering, as soon as we finished here, in 1 minute's time, I'm going to go and look at those charts. Triple tweezer top against the 200. You can't turn that one down, ever. That is a giveaway. That's a gift. It's a blessing, as he just said. Okay, folks, have a wonderful one, and I'll speak to you soon. I'll see you in the next stream, which will be tomorrow morning, same time. And remember, on Monday, next week, I start on Ola Prime TV live, and that will be 8:30 a.m. Eastern Time, followed by my own live stream at 9:30 a.m. Eastern Time, starting on Monday. Hope to see you there. I will remind you in advance.